Okay, lesson, secret filter rule that will increase your win percentage. Sorry, my camera is here and I'm going to be looking there in my second screen. So today I saw the lovely Ganesh actually take a beautiful trade. It was a lovely setup one, but I knew that I was not going to trade that. And how did I know that? Depends on the experience that you get. So that's why we're going through stage 1 and stage 2, so you can get exposed to like 100 trades, because every pattern appears within patterns. That's the secret. So let's find out what we're doing today. So the lesson is filter. Now there are filters that are already built into the rules that you use in stage 1, but they are kind of a gunshot or another gunshot, a shotgun approach. They're wider. The setup itself is very pinpointed, but as we progress towards stage 2 and stage 3 to become the trader that you are, your inner trader, to let that trader come out while getting disciplined, you will learn these little tricks, and one of them is this. Discover the secret trick that allows me to filter some valid setup ones. It allows me to take higher probability setups only. Now, this is the bit that you learn with time. But if you apply this, it can become a rule. What is covered in this training? So I'm going to go and talk about quickly about MTF analysis, the M5 M1 split chart. Secret number 1, simple method we use to increase win rate, avoiding rents. Even though they are technically correct, you can still get the DS1 on it. Even in stage 3, if you took it, you didn't pay attention to this, you will still get yourself a discipline 1 score, because it's a setup 1. It is a lovely looking setup 1, but it can be avoided. And secret number 2 is the X and Y, the X and Y axis chart manipulation. Right. How do we do that? So what is MTF? Well, MTF simply means multiple time frame analysis. Now we know that the charts are fractal geometric in nature, right? And so these are the benefits, because if you understand the fractal geometry of the market, that the waves happen within waves within waves, if this wasn't true, then Elliott wave would be completely useless, because the Elliott wave count allows you to look for the same pattern within the pattern within the pattern. So all the impulse waves will follow the impulse wave structure of 5 waves, and the corrective waves will follow the corrective wave structure, which is garbage most of the time when it's going sideways, right? Wave within waves within waves, and impulse waves within impulse waves. And this is the secret. There are 2 big mantras that we follow. One is work towards target zone 1. We always say that. And obviously we have the Bill Williams amazing quote, which is the holy grail of trading, is to want what the market wants. But that's more of a mental, psychological thing. Trading wise, waves within waves within waves, what we learn from experience and from a great trader is that break out in the direction of higher time frame trends. That is the holy grail of trading. Secret number 1, the M5 M1 split chart. If you look through the setup 1 book, I start with, and back in 2011 and 10, I start with examples of M5 M1 charts. So I follow the Fibonacci rule. 1/3 of your chart should be M5, 2/3 M1. The benefits that it gives us is that because M1 is fast and you are looking at every candle, you don't want to be switching between M1 and M5. So you want both the charts to be displayed in front of you. Now some people will put it on 2 charts, 2 screens, but that's too much of head movement. I don't like that. I just want to look at the chart and see what's going on. So every time there's a setup on M1, I want to know what's going on the M5. And what do I look for is the important thing. This is the point. Avoid trading at peaks of waves. Now, if the concept of waves, if you understand the concept of waves is that Wave is a wave because it has peaks and then it will come back. So how to not trade at the peak, how to trade where it's about to go up so that you can go somewhere in the middle, and before it starts to turn you get out. And that's what it is, how to use these two screen layouts to achieve this. So here's a chart. This is how I show mine. The M5 is on this side. I think it's a little bit more on this side on this occasion, but normally it will be around here. And that's M1. So this is the trade in question. Is this a good setup one? You look at it technically, everything is correct. You have a 3, you have a 4, you have a dot, you have a sleeping gator, although the gator is not asleep, so you know it should have been inside the box. Then you'll be using this box. Where are my? You would be using that level. Sorry, that level. But imagine if there was a box here, you would be using this. And so what is the benefit of it? Is that it allows you to filter your trades with a little bit of more accuracy. Now I'll give you another example. So you have a strong peak here. You have a peak, price goes up, comes down, creates a sideways box. Nice tight gator, tight box. You go long there. Perfect. Very good setup. Why not? But what is happening here that you do not know it right now that makes it a very, well, I can't say a very bad setup, but not a very good setup? Because two things are happening. One's happening on the x-axis, and one on the y-axis. And before we go to that, let's go to the next slide. Hold on, let's actually go back. So you see this yellow box. When I go to the next slide, it's going to be a 5 times higher time frame. Actually, this is M15, the next one is H1 chart. On the H1 chart, there is something happening. That yellow box represents that setup 1 that you are looking at. Let's go back to that. So here, everything is nice. 3, 4. But now when I go to the H1 chart, what I'm doing is that I'm manipulating the 2 time frames. So that's one technique, the multi-time frame analysis. Where on the higher time frame is my setup? So if I understood the wave principle a little bit, what I see is that price started here. Check the histogram. Right? Here and here. It went up, created a peak, pulled back, creating a hunt setup. This was the monarch. So if there's a hunt signal here, I would definitely have taken it, because that means it's going to go into a 5. And then you have another peak. So that you have a push, pull, push. Then it comes back. The peak on the wave is too big now. This is what so it goes up, goes sideways. This is what I call a B trap. So it's at the start, and when the price goes down, this would most probably would be A. This up is going to be a B, and within the B there is this pattern. Let me draw it. So when you have, let's say, a 3 up, when it finishes there, it will start doing that A down, and before it does, when it does this B up, now focus this, I'm going to take this one over here. So let's suppose this is your A down, this one, and when it does this B up, it's going to do it like this. So around this area there's going to be a box formed, and then it's going to do a C, but that C means that it's going to start to go down now, start doing its own C wave, which will have 5 sequences. So here, when it appears at this level, and you're on the lower time frame, which is this one, this was the A, this was the B, within this, it triggers you, and then it goes down, and you're thinking, I took a nice setup 1, but it didn't work. Now, I've been cheeky on this example because there are 2 things wrong with this, and I want to actually talk about it. Why? Because the x-axis manipulation and the y-axis manipulation, they're both important. Why the x-axis? X-axis is time. When you go intraday, every time has its own probability depending on every currency you're trading. So it is important to look at where in time am I? 1. 2. Where in price am I? 3. Where in dimension, zoom level, am I seeing this setup? So if you see a zoom level, a setup here, but when you zoom out, it appears to be in the peak of the wave. Somewhere here. Let's go to the screen instead of my hands. So on one chart, you have the nice lovely this pattern, but on the other chart, that pattern is actually just this portion. So basically you're considering the wave 5 of this chart. See, this is the 3 up, but within that you have the 3, 4, 5. So you're dealing with that 5 there. So that's the zooming out, and it helps you understand. And so if you have this chart displayed split, you'll be able to see where on M5 is my M1 setup. So what happened today was that the market moved. That's the secret number 2. Where in M5 is the M1 setup? What does that mean? Now let's go to the charts. So here was the setup 1 that was taken, but guess what? 160. So this is the y-axis manipulation. How much has the market stretched? Vertical. Because the market has an average, it usually would stretch and come back. It's like a wave, right? It's a tide. Tide bulges up, comes down. If you were to go to a seaside location and you see the tide, if you just ask the locals, or if you are the local, you do your analysis, you mark those tides, you will know automatically what is the average tide height for that part of the ocean, and where exactly. Then you go further, water will draw back when the tide goes down, and you would know the total height and the length. See? The height, the length of the wave. And that's the same with this, is that the tide goes up, and if it goes up within short amount of time, it doesn't have enough water, enough energy for it to maintain that tide. So when there is a storm coming and there's a high tide as well, water is going to go really up. It's going to go really up, but then it won't be able to sustain that level. If the winds stop, water is going to go quickly down. So that's what it is. It goes really up. So now look at it. One candle takes the price 88 points. It's just taking all the energy out too quickly, too far, too fast. Very difficult for market to then continue and go up after this. So on the M5, it's this. Now I'm going to put that box here, just like I did on the other chart, and then I'm going to show you the actual chart as well for the other chart, where it was. So let's go to the M5. I'll go to the M5, and you see, well, you already see the M5 in this case there. I don't want to trade M1 all the way up there because it's a very simple concept. I want to time my entries somewhere around here, somewhere around here. I don't want it to be peaking all the way up there. So yeah, it was Australian dollar M15 chart, and so the x-axis problem, every time, see, every horizontal level has its own probability. Time for that was incorrect. It's New York close. That's one problem. The other problem is the wave. Let's go to the H1 chart. So one was M5 chart, M15 chart, the other one is H1 chart. Look at it. Can you see the similarity? If you can't, just go back to the video and see the M1 charts that I showed you for DAX. The only difference here is that this is a steady wave 3 up. On the other one, it was one candle taking it all the way up, but still similar kind of situation, similar waves. See that 3, 4, 5, same thing, takes it down, goes back. What is it? A wave, B wave, C. How does it pan out? How can you draw this? A, B, and now I'm going to draw this bit over here. So just to make a point, I'm going to draw it here. So this bit is going to be inside of it. It's going to be this. And what happens is that you get a box like that, and before that you have a box like that, like you see here. So what you begin to think is to say, okay, let's take a trade here. But without knowing the situation that was here, you cannot know. And so if you're on the higher time frame, you can see it. But if you're on the M15 chart, you don't see it. You see a perfect setup 1. And that is why we use the split chart on the M1, M5, so that when you get exposed to those 100 trades in a period of 1 month, 2 months, you're exposed to quite a lot of setups that you would probably see in a whole year time on the hourly chart. I do recommend everyone to give DAX M1 or Dow M1 at New York time a go, simply to learn the pattern. Then you can apply it to any other time frame, and then you will be using it. It works brilliantly on the day 1 chart, the daily chart, because the daily chart, the D1 and the weekly chart looks, does exactly the same stuff like M1, M5. And this is the trick, where you can actually filter valid setup ones and increase your win rate. I hope this video helps you in your journey of becoming the trader that you really are inside.